Welcome to the Customer Wins podcast, where business leaders discuss their secrets and techniques for helping their customers succeed and in turn grow their business.
Hi, I'm Rich Walker, the host of The Customer Wins, where I talk to business leaders about how they help their customers win and how their focus on customer experience leads to growth. Some of my past guests have included Arnold Shu of G Reminders, Joshua Rogers of Arate Wealth, and David Perez of Tax Maverick. Today, I'm speaking with Cameron Howe, CEO of Investipal. And today's episode is brought to you by Quick, the leader in enterprise forms processing. When your business relies upon processing forms, don't waste your team's valuable time manually reviewing the forms. Instead, get Quick. Using our Form Extract API, simply submit your completed forms and get back clean, context-rich data that reduces manual reviews to only 1 out of 1,000 submissions. Visit quickforms.com to get started. All right, before I introduce today's guest, I want to give a big thank you to Jeff Moore of Valmark Financial Group, who was also a guest on my show, for introducing me to the team at Investipal. Jeff is a thought leader in wealth management who you should be following on LinkedIn, so go find him. All right, today's guest, Cameron Howe, is the CEO of Investipal, a front office automation platform that helps advisors win business faster while building personalized portfolios at scale. Prior to launching Investipal, Cameron was a quantitative research analyst at a global bank and Fintech operator. Cam, welcome to the Customer Wins.
Thanks so much for having me, Rich.
Yeah, I'm excited to talk to you today. So for those who haven't heard my podcast, I love to talk to business leaders about what they're doing to help their customers win, how they built and deliver a great customer experience, and the challenges to growing their own company. So to understand your business a little bit better, how does your company help people?
Yeah, it's a very good question. Maybe to take a step back on how we kind of ended up here. When I was a quant, I ended up working with a lot of different advisors. The quant side of the business, we're trying to generate alpha. It was interesting learning from the advisor world, where that's certainly a goal, but the primary goal is to make sure my clients achieve their goals. It led to a very interesting thought process where instead of, building portfolios to beat the market or to match the market, became more centered around making sure my clients are able to achieve the outcomes that they desire. And it led us down this pathway on the portfolio construction side to move away from this one-size-fits-all approach where I can be more tailored towards my client goals without introducing that level of discretionary management that eats a lot of my time up. Just so happened, one of the main outcomes that happened with that was around what that advisor spends all their time doing, which is relationship management. And we found a lot of the folks we spoke with, our current clients, they were spending a lot of time on manual tasks, probably same as the quick world as well. I'm having to do a lot of manual data entry, fill out those constant compliance forms. So our goal, besides the portfolio management side, is to help streamline the way the advisor runs their business, so they can focus more of their time and attention on what they often love, which is working with their clients. And we'll take care of the monotonous work on the back end.
So let me be clear. Are you still producing portfolios?
Yep. Yeah. So we will help the advisor optimize allocations, build portfolios from scratch. We have some AI tools that will do that for them. But then on the other end, a client onboarding flow to do document extraction, risk profiling, proposals, compliance docs. So I'd consider ourselves like a full stack solution on the investment management side within that advisor tech world.
That's fascinating. I mean, because if you're in investing, you're in investing. You don't think about the operational side of things as much. And how have your clients reacted to this? Is this like, does it make perfect sense to them? Like you would do both of these things?
Well, I'll pose a question back. How does an advisor usually make their money?
Through the relationship with their customer, right? They earn the trust of the customer. They bring over their money. They manage it. They get a fee or, AUM fee or something. Right?
Yeah. Yeah. So yeah, they're making all their money on the AUM side. But what we found, a lot of the value they provide is not on the investments. It's on the financial plan, the estate plan, the tax plan. And then the investment piece was left to something oftentimes a bit more generic where I'm deploying models for folks. So we found there's a bit of a mismatch between the revenue model and the value model that advisors offering their clients. So our goal is to stitch that together to make it more client centric on the way we deliver investments. And you could think of that along the lines of, a firm like a robo advisor would be offering based on your risk profile, Rich. You've filled this out. You're a balanced investor. I'm going to put you in my balance model. But this is all about the customer wins. How does that end customer win? They might have unique considerations like ESG was topical before. Maybe it's like values based, belief based. Maybe they have specific interest around like themes or sectors. How can we take some of that client level of data to help personalize that investment strategy that advisor's offering?
Cam, I love this perspective. I was just talking to somebody earlier today about identifying value and delivering value. And that's really what you're doing. You're saying the value to the advisor and the advisory firm is that relationship and that entire process, not just, oh, your investment did XYZ% growth or something like that. I love that you took this perspective. So what is the challenge then that you're solving that is so hard on that front end process?
Yeah, so if you want to go down the discretionary pathway, the discretionary investment management pathway, you're either growing your headcount on your team, like I now need to employ portfolio managers or CFAs. Alternatively, I could deploy those model-based portfolios. But that discretionary management comes with increased cost or increased time. So now that advisor has to sit one by one, review Rich's portfolio daily or weekly or monthly, make trades. I have to make sure it's in line with my firm's approved fund list, let's say if I'm deploying mutual funds or insurance products. So with all of that, there's this extra layer of complexity that I now have to spend all of my time and attention on, rather than do what I love to do, which is interact with my clients, make sure they're comfortable with their financial goals. I'm helping ensure they meet that. So there's just a natural, like we only have so many hours in the day. How do I want to spend those hours? And oftentimes, I forget who, it might be like Josh Brown, but they talk about the different evolution of wealth management. It started with like the stockbroker and providing access to the market for people. Then the second inning was focused on the like portfolio manager, where my goal is to now manage your wealth. Now it's more focused on let me manage the relationship, and that includes all those other aspects. So I now have to focus in on the financial planning, if you're high net worth, like that estate plan, tax mitigation strategies. So the advisor's forced to do a lot more while also having fees eroded over time. Um, with all of that said, how can we use AI to help automate and architect a more efficient practice for them to ensure they can scale efficiently without incurring a ton of cost or a ton of time?
So give me an example of how you're deploying AI and what it's doing and maybe even the type of AI that you're leveraging.
Yeah, it's a good question. There's a couple different spots. I'll talk on like the client acquisition side. I would note too, a lot of like what we've built out is just off of customer feedback. Like you, I won't speak for you, but I'm no Steve Jobs. I don't have like a grand vision here where I'm gonna force my way of thinking on people. It's just off of like where we found a lot of pain, a lot of friction. That first part was focused around when I'm trying to win a client. Part of that step is I have to review everything that they're invested in.
Mm-hmm.
They'll send me over an account statement. And like, one example, we received a 225-page statement from UBS.
Wow.
That advisor would have to sit down in the middle of their day and key in all of those securities into whatever sort of system they were using to visualize, Rich has like 30% exposure to equity and a little bit of fixed income, et cetera. On our end, they'll just upload that document. We use a mix of like an OCR layer where we will classify that document and break it up. And then we'll use an LLM to make sense of the information within there. We do some fact checks along the way. So that's like one like low hanging fruit we've been able to build that depending on the type of statement, it could take that advisor or someone on their team several days just to work through that one document.
Mm-hmm.
Probably similar to Quick, we get it down to a couple minutes. The other area that I find a lot more fascinating is deep learning. So
Hmm.
what we've done, there's different types of AI out there. LLM's not a blanket for AI in general.
Right.
Really good at like contextual stuff, writing reports, etc. Not good at math. So
No, it's terrible at math.
yeah, and I think like actually, I'm curious, like where do you guys apply? Have you applied AI yet into the Quick world?
Yeah, we're applying it into, well, there's multiple, right? We have machine learning
Yeah,
with OCR to extract data out of the forms. That's the form extract product. We're deploying technology internal to build forms with us, which is partly built with LLMs and OCR and a couple of other things that are going on that I'll leave out because it's our secret sauce, so to speak. But yeah, there's a lot of different tech to apply into that world.
yeah, I find it's tough to keep on top of.
It is.
Even on like our end, OpenAI comes out with like an agents framework, but we were building it on a different platform before. Now, do we have to pivot? Is it good enough?
I
Are like the
know.
different LLM models better for certain tasks than others? And then you have to manage like multiple different uh deploys. I can't just go entirely with like my own bespoke one or like with an off-the-shelf OpenAI model. I have to think on like what is the use case and what model is best suited today, but that ends up changing like 2 weeks from now.
Well, yeah, you have to build an architecture that you can swap out models within the same framework, like OpenAI models, because they keep changing, or different LLMs altogether, because hey, maybe Sonnet's better this than OpenAI for that purpose. And we have that in our architecture as well, that we have to be able to upgrade and swap it out in case there's something better.
Yeah. Yeah. It's I think it's like is it I forget who's doing it. There's like a middleware provider now. When you talk about
That's
like
managing that. Of course there
yeah,
is.
it's like manages multiple different API keys. Like we use Cursor a ton for like our software development, and you can pick what model you want to choose from, but that's good for software development. It's not good for like client-facing apps. So you then have to your
Yeah.
point on the architecture side now manage like a intermediary system to dictate multiple different models. One might go down or like OpenAI's hit like a limit. Do I have to switch to a backup now to ensure the business doesn't go down?
Yeah. Right? That's its own crazy thing. And speed, latency. Yeah, anytime you build these dependencies on third parties, you have those types of challenges to mitigate. And believe me, I've been yelled at by the CIO of AIG because we chose Amazon once when Amazon went down. Yeah.
That's funny. We've been through that battle. I've heard some firms, yeah, to your point, I don't know, I don't know AIG, but um, they will only go with you if you're on a sole approved cloud provider that they've already due diligence. But by and large, like the three major ones, Microsoft, Google, Amazon, are all top notch. Like, is it on the firm now to be more like to bend the knee and be able to work with vendors like ourselves that are on multi-cloud frameworks, or one that's not on my approved list? It is still a major provider. It's not like a mom and pop. It's an interesting world now. I feel like tech's always been obviously at the cutting edge for or software rather for a long time. But now with like the AI piece, there's just this whole education world. I feel like we have to spend a lot of time on just
Hmm.
is my data safe? Are you training your models off my stuff that we now have to navigate?
Yeah, that's true. I mean, you're taking in that 225-page statement, you're collecting a lot of information. Where is it going? Right.
Yeah.
And I'm sure it's just going to produce whatever insight or report you have, but you're not taking all that and training a model with it.
Well, what we actually do, we now have a client database where like I know your socials and I open up bank accounts in your name. That's how we make all of our money.
Oh,
I'm kidding. I'm kidding.
wow. No.
No, we make sure all that gets scrubbed before it ever even hits an LLM. To your point, otherwise it's a non-starter for any firm.
Yeah, obviously. So you were saying your favorite part about AI and you diverted to ask me a question. Did we hit your favorite part?
Yeah, so my favorite part is on the deep learning side, which is where like we apply it on the portfolio construction world, where everything's like it's a mathematical model at the end of the day. I don't have to worry about like vectorization and whatnot with like NLP libraries. We focus a lot more on the portfolio design. The unique consideration, not to be too nerdy with you, but there's a world called modern portfolio theory
Hmm.
where essentially, I can throw in a bunch of different holdings and, all those holdings might be low volatility, but they're highly correlated with one another, which objective wise, I don't want to have happen. Like oftentimes utility stocks, let's say, are low vol, but they're also sensitive to interest rates. So in a hiking interest rate environment, while I might perceive my portfolio as being low vol, it's actually quite correlated with the bond market, and I end up taking on hidden risk I might not be aware of. So, modern portfolio theory tries to get around that where it doesn't matter the securities I put in there. Well, it does, but it will design a portfolio that is minimizing the volatility in aggregate, where I could have a barbell approach with some high risk assets, some low risk, but uh, the way that they're correlated with one another offsets that sort of correlation with like a low volatility area. So this is like a layman. I'm trying to be layman's as possible here, but how like a typical portfolio manager might build a portfolio if they are more robust, then you start wanting to add in constraints, which comes back to like the customer and the client end. My client has all these considerations as well. Do I want to factor in alternative investments? Do I need to take into consideration the goals of the client? Do I need to take into consideration any client interests they may have to make it more relatable to them, to make sure I'm providing that level of value and that level of service? So that problem becomes very complicated, and you can't just use like generic programming for it. And that's an area we apply that deep learning model. And the cool thing with the deep learning piece, back in my quant era, a lot of the work we would do was black box, which the SEC does not like. If you were providing investment recommendations with AI, the advisor still has to, or the investment professional still has to spend a lot of time figuring out why this is in the client's best interest. And they're
Hmm.
ultimately the ones on the hook. So the unique angle that we've taken with this is how do we explain the outputs from the model? And, back to the LLM conversation, you can use the outputs from the deep learning side to inform how everything was calculated and explain that back to the advisor. So there's the CYA element, and then there's also the client interest to make sure that advisor can convey that message effectively back to the client. So that's an area I like to nerd out a lot in.
Yeah, I can tell. That's cool. Deep learning. What does that mean?
So like machine learning would be, very much to the tune of I'm going to give you a training set, a model, like a regression model would be machine learning. I can then apply a testing set to make sure I can test it out a sample. The deep learning side will end up adapting over time. Like there's multiple different deep learning models, but like the most common one would be like a neural net, where I don't really know if you think of like a brain structure, there's little electrons firing off to different nodes within the brain. It will calculate based on its own volition, essentially, what each of those nodes I should prioritize. Each of those nodes might have a specific objective behind it. One node might have one around risk, one around returns, one around like the client values. And then through that as well, it can end up reinforcing itself. So it can end up getting better over time. So it's not just like an optimization or a regression model, which is somewhat fixed. And if new information comes in, I have to fit it to that existing framework. It will end up adapting based on, in this case, market conditions. Let's say where I might kick out some stocks I would hold historically to enter in new ones, or the client goals might be vastly different. And I have to rather than have 20 different machine learning models off the shelf, can use one deep learning model that's adaptable. So it's the adaptability.
Okay, that's cool. I appreciate this explanation. Hopefully the audience does as well. Um, does that mean that deep learning is theorizing or simulating or doing multiple projections to see patterns and figure out optimal answers?
Yes. Yeah. It might, you could, I mean, to break it down maybe more into like the financial services world, you could think of it kind of like a Monte Carlo simulation where it might be running itself, 20,000 times. Um, the Monte Carlo assumptions are always fixed versus the deep
Mhm.
learning, it will end up adjusting itself dynamically.
Cool. I built a Monte Carlo simulator back in 2001, and it was just fascinating to me what it did and how the outcomes worked. Because I don't know if you know, I was a financial advisor in late 2000 till 2004 almost. So here's another question, and I don't know if I'm just out of touch with how it works, but
Yeah,
when I was an advisor, it was actually hard to get all of the client statements from all the different places they held investments because their view was, you're my advisor, I have my accounts with you. I'm not necessarily giving you these other ones that I've had for whatever years. But with your product able to read statements, is that a problem? I mean, really, the genesis of my question is it a problem in looking at a portfolio if you don't have all the pieces and all the information?
that's fair. That's a very good question. I mean, the client might not want to, they might only be giving you a piece of their business too. They don't want to give you the rest of it.
Yeah.
That can also just come down to like the onboarding questionnaire you ask that individual where let's say they give you their statements. That statements are for like $1 million out of like 5 million they own holistically. It's this is where that conversation with that end client becomes very important for the advisor. They still have
Mhm.
to know what they're managing and what they're not managing. Where, like I might have my own Robinhood account that I'm day trading in. It's still important for me to consider, okay, you're in 100% risk assets. So
Mhm.
maybe now when I come over to my recommendations for you, I'm going to put you, your risk level, Rich, might be balanced. I might have to put you into like a conservative bucket now, to ensure that I'm offsetting that excess risk you're taking on your day trading account. So, obviously the advisor wants to get everything from the client. We find though that they will get a piece of that. With that, they'll have a conversation or they'll have their note taker join the call, let's say, to collect more of that information in real time, to inform the way that they're recommending a portfolio, let's say, for a client that still has to consider the overall asset picture as well. Like
Mhm.
if you are a real estate, did you actually encounter this at all, where like they'll have like a massive amount of assets that are in like held away accounts I'm not going to be overseeing?
Oh, sure. Yeah.
How'd you get around it?
We said, look, we can't give you a financial plan without the full picture. We don't have to manage your assets, right?
Yeah.
But then we did something else at the back end. When we were done showing them everything, we had a summary page that said, okay, I want to show you how many accounts you have by type and how many you need. So you have 4 individual accounts each spouse, and you have 6 joint accounts. You really need 1 individual account each and 1 joint account each. So this is spread out across 4 different companies. You either love opening statements and calling 800 numbers, or nobody's asked you to consolidate this before.
Yeah.
And honestly, that year we did that, we doubled assets under management because everybody's like, oh, yeah, duh. I don't really want to. This was from that old relationship or whatever. And so to them, they just didn't think about it. And we expressed that to them. In other cases, they were like, no, I have 2 advisors for a reason, or I have this account over here for this reason. And that was fine. I mean, no pressure. But I mean, this is a long time ago for me. So I just don't know what people are doing today. And AI is making it easier and easier to digest this information. So why not?
Yeah. I mean, like to your point there, we're just a tool. It's still on the advisor and that's where the value is provided is understand at a deeper level what that customer is going through, where their assets are, what their goals are, and then structure something more holistically. You could give us one statement, you could give us 20 statements. We don't care at the end of the day, right? It's on like the value you're providing the client and making sure in that discovery process, you're getting the full information set from them.
Yeah. So, okay, where do you fit into the advisor's tech stack? Because there's so many things they have to encounter, right? And you're probably hearing about this all the time from them.
Yeah, I mean, not to beat a dead horse, but like look at the Kisses advisory
Yeah.
tech map now.
It's unreadable. It's too big.
We are technically on that map sitting in the onboarding bucket, but I don't think that does us full justice. The way we think about it, to your point, the advisor now has to be a quasi CTO and wrangle how do all my systems talk to one another.
Hmm.
Our goal is to own that investment management vertical. I will know we don't do trading and rebalancing, but anything from that as it relates to the investment side, client risk profiling, proposal generation, account opening into portfolio construction, and I'll call it compliance monitoring. So, like monitoring the ongoing performance of those accounts and flagging alerts is that area, which means on our end, the main integration points we have are with the CRM providers at the top end and the
Hmm.
custodial platforms on the back end. And then in conjunction with that, you'd still have your financial planning software, your fee billing engines, your PMS platform. But we own that, I'll call it that investment research, investment management vertical.
Okay. What do you think your future is, Cam? I mean, in terms of like how AI is changing things, how you see your product unfolding over time, what is your vision of, I mean, you said you're not Steve Jobs, but you have a vision, I know.
Yeah, it's a good question. We're seeing, I'd say, a major industry headwind, which is there's not enough people coming in to the RA world to fill the gap there. It's funny, like we started off as a direct to consumer product. I don't know
Hmm.
if I
No,
mentioned that before
no, I
at
hadn't
all.
heard that.
So we launched originally as a consumer product to help people move away from this day trading mentality and think more long term with their investment philosophy. The learning we had from that is people have such a strong affinity to their money that they want a human in the loop. So I don't think that part goes away at all. What I do think is there's not going to be as many humans getting into this industry. And as such, in the next 20 years, that advisor is essentially focusing a lot more on the relationship aspects. The goal we have is equipping them to manage that relationship effectively, to sell effectively without being bogged down in all that minutia. So our long-term vision here is we will sit essentially as a co-pilot alongside you as like your pocket CFA, your pocket portfolio manager, where like you can ask us information to perform tasks. We will go and do all that work for you without any sort of complaint, and then you can focus your time, your effort in the real world, not in the computer system world.
Okay, you didn't say it this succinctly, but kind of what I'm intuiting from this is the future means we don't necessarily have to have more advisors enter the space. We still need them, obviously, but there's going to be consolidation in the sense that advisors can have more clients and more assets and more accounts and more portfolios because the automation level and the capability of these tools like yours. Is that what I'm hearing?
Correct. Yeah. Like what I'll say, we're seeing the trend of the independent RIA surface. I'm now trying to run my own practice. And to do that effectively, I historically would need several other people on my team to support me.
Hmm.
But we see it as a democratization where now you could end up launching your firm. It's quite cheap to get off the ground these days to launch your own RIA, but to maintain it is another thing. So, how can we equip you to operate as a sole individual without requiring that level of cost to service those clients on the back end?
Yeah. Man, this is awesome. I think you just touched on how we can solve this problem then. I mean, I think we ignore how much efficiency is being built out these days, and it's incredible what's happening. I know there's another aspect to this too, because like in my world of forms, it's all paper or paperwork, I should say. It's largely not paper anymore. Everybody said, hey, we're going to get rid of paper, right? But with printers coming out, we printed more paper. We got rid of the green ledger books for accounting with QuickBooks and whatever, but there's more
Yeah.
and more paper. So I feel like AI is going to create more opportunity to create more jobs and more ways of serving clients in unique ways. And you're
I
playing a role in it.
Yeah, I actually, to throw that same question back at you, I'm curious like where you see it evolving towards because I know, like with like newer entrants, there is like a digital first mentality, but on the counter end of that, the advisor still has to get everything signed off by clients. Like I'm curious, like what you see in the future on the quick form side.
For probably the better half of 12 to 15 years now, I have known how to get rid of forms. I know how to do that,
Yeah.
but that's not the problem. I can't get rid of the need for sharing data. And the form is the vehicle for collecting that data. So the form plays multiple roles: the vehicle to ask the questions for the data, to then give the data to the person who's going to put it in the system, or give it to the system that's going to digest it and ingest it. But it's also serving as a legal document in many cases, most cases, frankly. That signature is there for a reason. I used to kind of play this out with signature, like with DocuSign. I've been known them forever. Like, forms are signed more often than contracts. Like, we will 10x the volume of signatures you're getting because forms are used all the time. So where's it going? We already have plans in place to deliver more web-based experiences, more responsive, interactive experiences where the form's involved without looking at the form. Who wants to look at the form? You just ask me the questions. Next time you go to your doctor, do you want to sit in there with a clipboard and handwrite your information over and over again? Or would you rather type it on the screen at home before you go there? How about this? What if they could call you and say, hey, I'm the AI assistant for Dr. Joe's office. Could I interview you on your way in on the drive?
Yeah.
And now you answer the questions as you go, and they fill out the form for you. And your voice authorizes it. Your unique voice signature becomes your signature. I think there's so many opportunities to advance how we collect data, where forms is the underlying design mechanism to say what data I need, and the ultimate design mechanism for the signature for a legal artifact, if you will.
Have you ever played around with Whisper?
A little bit.
That stuff's fascinating. That like AI trend now of like the natural voice agents and using, I couldn't agree more with what you said.
Yeah, I think all of that is happening. I've got a friend who started a company for being a voice agent and looking for a way to apply it in the right way. As another friend said, voice agents, you could rate them as a B+ employee. They're not your A+. They're not perfect, but they're 24/7. They never take vacation. They don't complain, and they perform at a B+ level solidly every single time. And I think that'll become an A- and then an A player eventually. Now, these are great questions. I have to wrap up and ask you my last question, but before I get there, what is the best way for people to find and connect with you, Cam?
I'm quite active on LinkedIn, Cameron Howe, if you want to connect with me there. You could also check out our website and connect with someone on the team, Investipal.co as well.
Awesome. All right. So here's one of my favorite questions I love asking my guests. Who has had the biggest impact on your career and how you got to this point?
Yeah, it's a good question. I'm going to say when I first got into the capital markets world, my boss, Sid Mokhtari, shout out to you, great human being. He hired me from Deloitte, where I had zero financial acumen, but I knew data science. And I think his first test for me before I got hired was to build a pivot table. And Rich, I never have experienced the pivot table in my life, but he still hired me. And the first task he gave me was to memorize, because I'm in Canada, he asked me to memorize the TSX 60 tickers and the corresponding names. And then fast forward very quickly thereafter, he had me running calls with clients, building out new strategies, and then ultimately spending a lot of time and managing the relationships with the investment advisors, which ultimately led me to launch Investipal. So I owe a lot to him for being able to take a chance on me and building it out. I wouldn't be in this seat without him giving me that chance.
That is awesome. That is awesome. We all need somebody to look at us and say, I see where you could go, and give us that chance.
Yeah.
Man. All right. I have to give a big thank you to Cameron Howe, CEO of Investipal, for being on this episode of The Customer Wins. Go check out Cam's website at investipal.co. And don't forget to check out Quick at quickforms.com, where we make processing forms easier. I hope you enjoyed this discussion. We'll click the like button, share this with someone, and subscribe to our channels for future episodes of The Customer Wins. Cam, thank you so much for joining me today.
Rich, thank you.
Thanks for listening to the Customer Wins podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.